viewers, welcome to my channel. And today's topic is how to identify trade and why it is important. In a beginning level of trading, so we it's a very important identification of trade. From that level, we can get entry. So we know that two types, two no these are three types of trends are there. First is in uptrend, where is market shows higher high, higher lows. Second is a downtrend, in which market low form lower high, lower lows. And third is a consolidation market. A market cannot perform higher high, higher lows and lower high, lower lows. That means market in a sideways or is in a consolidation. So let's see how the market look in uptrend. So it is uptrend and it is in downtrend. So what time frame is good for identification of trend? So I highly prefer a 1 hour time frame. 1 hour time frame is the best for intraday purpose, not for swing, not for long term. It's a intraday purpose. From that we get position on 15 minute or 5 minute. That means in lower time frame. So we get a position. We will get a position on lower time frame. So let's see in chart how it's look like. This is my bank nifty chart, and I switch a time frame in a 1 hour for identification trend. So I alt G go to a random date. It's okay, 1 May, even the data can hear, so we get information. So okay, so it's okay. So market firstly come at that level and perform a double bottom form. The market continuously go up. It's a go higher high, higher lows, higher high, higher lows, higher high, and higher low. It's a low. It's not low. It's this will be a correction. So later in video we talk about a correction, but there is no point. So market at continuously go upside. So like this, that means a market is in an uptrend. So we have to find a buying position, not a shorting. If we do a shorting, that means a counter trend. That means it's a small reversal which happen. So where at that time we get a short entry but small target and small stop loss. But here we get a long position for intraday purpose and also swing purpose. So it does not matter where is I am a intraday player. So it's so market is in uptrend. So we have to get a position for buying opportunity. Suppose I will take as this is a lower low and lower high. So here is a 2 ratio is a 0.6. Market come at down, bounce up again. I just extend this level. So if market come at that level, I initiate a buy position like this. Again, if I do flip level like this, if you uh, here is again a level 0.3. Okay, why the market come out that level? Because here is again a support. break the market support, it again is a W pattern. What is a W pattern is here is clearly look like, so market break, then retest, and again go back. So market is in uptrend. Okay, so again we drop a level from here. So okay, this is so after a big move, market have to go for consolidation. It's an approximate market will, okay, correction which happen, market start from here is up to 3000 points. So market have to consolidation mode. So this is like a like this is a consolidation zone. Here market is in a side, little bit sideways. This market like it's in a range bound. The market break up, immediately recover, and further continue. It's it's a small consolidation zone. So let's check what's next. Okay. Again, a breakout for a small period of time. Market go for uptrend. So let's wait. I take as this low, this higher low, like this. It's a marketing uptrend for okay, for 15 days. Okay, market is in uptrend. So what we do, we have to find a good opportunity for buying. So I just draw a fib level and extend this level, market come at level, bounce. Again I'm drawing a fib. Okay, so break this level. Okay, extend, market come at level, again market bounce. So like this. So again it's a third touch. So if you never heard about how to draw fib level, so I already make a video how to draw fib level and what is a third touch. It's a first touch, then it's a second, and then it's a third touch. So what is a third touch? Then market breaks for a short time period, market go for a downtrend. So like this, for short term period, it's like a correction level. Again market go for uptrend, again like a market go uptrend. But if market travel from here to here, it's about 2000 level complete, then market have to be go for a consolidation or a sideways. It's look like a sideways consolidation for a big move. Why it just happened? Because market travel from here to here is about 2000 points. So market have to consolidate first, then break out or break down or retest, and market again continue rally at upside or downside. Okay, so how it's okay, we just okay look at that this position for uptrend is sideways, how it should look like in downtrend. Let's again here is sideways, again a rally with happen. Okay, how it should look like in downtrend. Okay, market do higher high, lower low, lower high, lower low, lower high, lower low, lower high. So market is in a downtrend, so we have to look for a shorting opportunity. Okay, it's a magnetic trend line. We don't need a buying opportunity. I have to look for a shorting opportunity because the market is in a downtrend. Again market recover at that level, Again market it's a consolidation level, and again continues is a downtrend. So we again draw a fib level like this, and this is one of the level. If we draw from here, again we get a level like this. We're measuring a shorting opportunity instead of buying. So that's it for today. So okay, here. So in finally, okay, so in a summary, there is a three type of trend. One is a uptrend, so we are get a position for buying, not for selling. In a downtrend, we have to identify a shorting position. In sideways, nothing we have to do, just wait and watch. So and then also for intraday purpose, I recommend only 1 hour time frame and 15 minute 5 minute for entry. So that is for today. So thank you guys, we will see in the next video.